Good morning and welcome to the AMY Protection Viewpoint 2025, the next chapter. I'm Andrew Montlake and I'm Chair of the Association of Mortgage Intermediaries. Protection Viewpoint is now in its 6th consecutive year and has become a key date in the industry's calendar. It wouldn't be possible without the passion and enthusiasm of all those involved, and a special shout out to L&G, Royal London and the Exeter for their support, and the advisors that took the time to complete our survey. It is your voice that helps to shape the market. Now, today we'll be sharing key insights from our research, bringing together the findings and capturing what consumers and advisors truly think and feel about our sector. This year, we've placed an even greater emphasis on our call to action points. These highlight the areas we believe should be prioritised to keep driving progress forward. You'll find them featured throughout our report, which will then be available to access at the end of today's event. The theme this year is past, present and future, revisiting key findings from past viewpoints to see what's changed, looking at the current consumer buying journey and looking ahead to the role of technology. Technology, including AI, is changing the way consumers find information and interact with services. But are they changing things in the way we think? Our research suggests not. Human connection remains central to the consumer experience. We ask consumers how important human connection is to them at 3 key stages of the protection buying process, and around 70% of consumers said it was important. This shows that despite access to online tools, consumers still value personal connection. Now, buying protection often involves complex and emotional decisions involving health, family and finances, but trust and reassurance via a real person does matter. With regulatory work that's ongoing across the mortgage and protection markets, it's vital we don't lose sight of this important point. Artificial intelligence, AI, is a hot topic, and not a day goes by without another headline or report, whether positive or negative, about how AI will fundamentally change our industry. And it can be hard to cut through the noise to understand what is a real possibility and what is just fake news. Am I, for example, even really here? This is why this year we wanted to understand consumer and advisor views concerning this. Around a third of consumers are trusting of AI when using it to answer questions, provide advice on which option is the most suitable, with slightly fewer trusting it for making their decisions when it comes to protection insurance. Now, this gives us some real food for thought. Our advisor survey found that just over 1 in 4 see the rise of automation and AI as a threat, and I can see why some advisors may feel this way. However, the future of our sector lies in integrating digital tools with meaningful human interaction, leveraging technology to enhance efficiency while preserving the personal human connections that drive consumer confidence and informed decision making. Now, these are the parts of the research that really stood out to me, and there's much more to come. In a moment, you'll hear from our other speakers, including a panel debate that's sure to spark an interesting discussion. And we want you to join in. So please share your thoughts on LinkedIn and across the social platforms of your choice using hashtag #AmyViewpoint. We hope you enjoy the event.
Hello, and I hope you're enjoying the event so far. I'm Stacey Penn, Head of Policy at AMY. Having been involved with AMY Protection Viewpoint since the beginning, it's exciting to see how the research has evolved over time. But it's not just the research that's changed. The world around us has shifted too. Over 3 in 4 consumers report that the current economic climate has impacted them emotionally when making financial decisions, with 51% describing it as a big impact. Certain groups feel this strain more, including younger people, mortgage holders, and those with dependent children. Despite this, only 49% of advisors revisit protection when a customer is expecting a child, and just 42% do so when a customer is going through a divorce, even though these life events create significant financial uncertainty. This demonstrates an opportunity to strengthen how we anchor protection conversations around key life events and build a clearer link in consumers' minds around the purpose and role of protection. Referral routes also play a part. 55% of consumers would be comfortable being referred if their mortgage advisor doesn't offer protection. The write it, refer it, don't ignore it industry mantra has grown momentum in recent years. However, as too many consumers still remain unprotected, what can we do further to fully embed this across the sector? What stood out to me most in this year's research is how many consumers drop out of the protection buying process before completing it. Nearly 1 in 5 consumers, rising to 1 in 4 aged 18 to 34. Once consumers leave the process, they may never return, and their experiences can shape perceptions of protection more broadly, whether influencing their own views or those of family, friends, or colleagues. It's interesting to see how far consumers get in the process. 47% that drop out make it as far as receiving an initial quote. I believe consumers drop out at this point for a variety of reasons. They have uncertainty about options, price, or the cover. They struggle to see the necessity and benefits. They are overwhelmed by the amount of information available. They are unsure what to do next. Or some may be doing research to come back and revisit in the future. It's clear that advice plays a central role in helping to overcome some of these barriers. As an industry, we must take the time to scrutinise the customer journey, identifying where pinch points occur, and looking at ways to introduce advice earlier in the journey to keep consumers informed and connected. 1 in 3 that drop out begin their journey online. In online, direct and price aggregator journeys, highlighting to consumers that alternative options may exist, for example through a prescribed industry wording used to explain that a decline or a high premium isn't potentially the only solution, and signposting them to advice where appropriate could help more people complete their protection journey. This year's research reinforces just how important it is to strike the right balance between technology and human connection, understanding where tech can enhance the journey and where human advisors remain irreplaceable. If we get that balance right, it could help us tackle many of the challenges and seize the opportunities highlighted by our research. It only takes small steps, made by many, to make a difference. The community group part of our study offers fascinating insights into where technology best fits within the protection journey. You'll get access to the full report at the end of today's event. This is just a glimpse of the research that stood out to me. Now let's hear what others have to say. For the first time ever, I'm delighted to introduce the Viewpoint debate, where leading industry voices discuss key findings and share their views on what this means for the sector. And remember, we want to hear from you too. Join the conversation on LinkedIn using #AmyViewpoint and feel free to submit your questions during the debate. We'll review them and share our responses afterwards. Let the discussion commence.
Hello and welcome to the Viewpoint debate. This year's Protection Viewpoint report, The Next Chapter, has looked at the protection sector through a lens of the past, present and future. Looking at the past, we've examined previous research and the statistics to see if consumers are more likely to remember protection conversations now compared with 5 years ago. In the present, how can we understand current sector challenges, including where consumers drop out of the protection buying process, how advisors use social media and practical strategies to improve engagement. And then moving to the future, we explore emerging technologies like AI, consumer attitudes towards AI versus human interaction, and advisor views on the biggest threats to the industry. How can advisors best protect their clients in a changing world? And to unpack all of that, I'm joined by an outstanding panel of experts, each bringing their own unique experience and perspective. So we've got a big topic and plenty to debate. So let's get into it. This is the Viewpoint debate. Hello all.
Hi.
Lovely to have you here. So let's get started. In previous industry research, we've tried to understand why consumers do or don't buy protection. We wanted to take this just one step further, and in this year's Viewpoint, we've analysed at what stage consumers drop out of the buying process. Our research shows nearly 1 in 5 consumers have started the buying process but don't complete, and that rises to 1 in 4 among younger adults, aged 18 to 34. And with almost 1 in 3 of those dropping out of the journey, they start online. But most drop out at later stages, with almost half dropping out after they get a quote. So I'd really like to dig into this research. So if the research shows many people start online with limited guidance, as a sector, how do we better signpost the role and value of advice? Vicky?
So I think the first thing about this area is to accept customer behaviour, because I think we can sort of create this friction and disbelieve it, think it's wrong, think it's right, however our perspective is, but we have to accept that this is actually customer behaviour, and it's likely to continue to change and evolve, and these stats are probably going to develop as we go through the years as well. So I think that's the first thing in our mindset, is to get that right. I think secondly, think about customer beliefs as well. You know, they're not waking up in the morning, as we all know, and saying, hey, I want to buy protection today. But by going online, they are showing an interest, and there is obviously an opportunity there. So I think that's a good way to think about it, is they may not complete it fully, but this is where the opportunity for advice and advisors to get in front of the customer and complete that journey is there. So I think that's a really important thing to remember.
So Jamie, I think Vicky's touched on that. How do we get the value of advice piece into this if they're starting online but maybe not completing?
Yeah, and I do think Vicky's made some really good points of what she said, and that value of advice is even more important today than what it ever has been. But I do think there are some disconnects. I think there's a trust element to this as well, certainly with some of our younger consumers. So they will be using the likes of money supermarkets or money saving experts to go through their purchasing journey, but how do we as advisor community make sure that we connect with that particular customer at that point that they need us the most? And for me, the protection is an advice-based sale, and that's where we can start to really build the trust with those particular consumers.
So Jamie, you made a really good point there around it's an advice-based sale. I would totally agree with you. So Matt, coming to you on this, how do we get them to see that segue then from going protection online into having a conversation with an advisor?
Yeah, absolutely. I think for me, and I'm trying to picture myself in the shoes of someone going online trying to do this. I think if you're going online, looking at the websites and starting the medical questions, especially the medical questions, I think a lot of that can be quite overwhelming. Some of the stuff gets very personal, very deep with some of the things that they ask, but they need to ask those things. And I think it's all about hand-holding for me. So with my clients, I'm very much, look, it's a hand-holding experience. I'm going to guide you through this process, explain why they're asking these questions, why it's important, and why we need to answer them honestly, truthfully, accurately. So yeah, very much for me, it's a hand-holding experience, and that's the message I need to get across to people when I'm sat in my appointments.
It sounds to me like we need to accept that some people will start online, but we need better signposting online to actually lead people to get the advice they need and not be overwhelmed by a journey that they don't need to be because they've got somebody to hold their hand. Perfect. So if we look at one of the key statistics, which links into this from the very first Viewpoint study, so it highlighted the gap between advisor-led protection conversations and customer recall. And as part of the past theme of this year's report, we revisited the question, especially following the implementation of Consumer Duty. This year's research shows we just haven't moved the dial enough. 39% of mortgage holders can recall a conversation where their mortgage advisor mentions protection. So do we feel the stats are reflective of all the work that we've done so far, and why are protection conversations not resonating with customers? Matt?
Yeah, very disappointing to see that stat not moving anywhere near as much as it should, really, with the work that the industry is putting into having those conversations around protection. We've got 99% of advisors saying that they're having those conversations. So either they're not happening, or as the report is alluding to, they're just not memorable enough, those conversations. So when someone sits in and they come and see me for a meeting, for an appointment, I make it very clear from the offset that I have 2 jobs. One is to arrange the mortgage, and that's just going to take care of itself. It's nice and easy. That's why they came in to see me. Easy. They walk out with that. The protection is a little bit more tricky, but as long as you introduce it early enough in the conversation and start to plant those seeds nice and early, it's a walk in the park. And you do that by explaining that you have these 2 jobs. One is to help you buy the home. The second, arguably more important one, is to help you stay in the home. And that's the message that I tend to get across to people.
So it's planting that seed right at the beginning. John?
Firstly, I agree with everything that Matt has just said. It is disappointing, but I think the industry is trying really, really hard, both advisor and provider. I also think we've seen a lot of developments in terms of write it or refer it initiatives. And I'd encourage all advisors, don't fear protection, refer it if that's something that's new to you.
And Vicky, Matt picked up on a bit of an emotive side here. Do you want to expand on that?
Yeah, I think I do really resonate with the difficulty of the advisor-customer conversation, because we've had extensive regulatory pressure. We've all become really risk averse. We're concerned about the advice that we give, and almost some of the questions and the processes that we've had to adopt for protection to de-risk our business means that we have lost some of that emotive human to human connection. And I think if I was sort of to challenge advisors, I would take it back to that mindset. And remember, we're in a people business. This is a people conversation. This is about highlighting their life, their family, what potentially could happen. And therefore we need to remember that. So it's as much about absolutely fulfilling your processes and making sure that regulatory side is covered, but adding that human element, going back to conversational type discussions with the customer, and really making sure that they remember that conversation, because you as an advisor have connected with them at that human level. I think we can often forget that, and that's really important.
So I'm hearing talking about human, person to person, talking about need, not product.
Absolutely, Steph, yeah.
And touching into that human side, it wouldn't be a panel discussion in any today environment if we didn't talk about future tech and, most importantly, AI. Our research did look at the use of AI, both from a consumer and an advisor lens, but I want to focus on consumers just for a moment. Around a third of consumers are trusting of AI when it comes to protection, which actually rose to 1 in 2 of younger people, perhaps slightly expected. Given that AI will become an integral part of our lives in the future, how do advisors adapt their businesses to blend technology efficiencies with that human connection? Jamie?
I think it links to the other question, Steph, that we just answered, that actually people buy people, and that's a really important element of the protection sell. But AI isn't going anywhere, and that's going to be important for advisors. AI can support and help with things like admin. It can do some comparisons for you. But what it doesn't do is lean upon the sort of empathy and emotional intelligence that you can do as an advisor with that particular human touch. And I think that's going to be really important for us moving forward, and really important for a purchase of a particular customer, understanding what their needs are. So although AI is coming, and it's important that we all embed ourselves with AI, we still do need those human elements.
I totally agree with you there. Vicky, do you want to add on to what Jamie was talking around?
I think it goes back to sort of what I was saying before about seeing this as an opportunity, not a threat. So embracing it really as an advisor. Think about, as an advisor, all the things that you don't like to do, some of the heavy lifting. And actually AI is your solution to help make your job more enjoyable, to spend more time on the human element. There's a phrase that I've been banding around for a few years now, and I'm going to say it again. It's about actually making you the best bionic version of yourself, the most efficient person of yourself, rather than being replaced by a robot. And I think if we can bear that in mind and think about the advantages, and ultimately, we have to remember, to the points that Jamie was making, this is what customers are expecting. This is their life now, especially the younger demographic. So we have to embrace it and move with the times, and really think about all those awful jobs that we hate and using it to make those easier.
I think there's also a business opportunity piece here as well, isn't there, around how can you use AI to analyse trends and data within your business. So there's definitely opportunity as well as efficiency drivers.
Yes.
Matt, how are you? Are you already using AI within your business? And If so, what benefits are you seeing from that?
Yeah, absolutely. Great point to make, actually, because so this year I've really kind of like started to dip my toes into it a little bit. And there's two ways that I've been doing that. So the first way is I've been using AI to take notes in meetings and stuff. So this is really good. You have the meeting with a client, discuss whatever it is that you're discussing. And then a lot of them are really good, and they'll bullet point all the points taken away, and it will give action things as well. So if you've got a client that needs to go off and find what they get paid, sick pay wise, how much, how long for, prompts them to go and do that as well, which is really good. And then probably the other way that I've been using it quite a lot, and we've had a few of my colleagues have been experimenting a little bit with this as well, is that some of the bots that you can use are really good for helping you pitch protection to clients. So if you have a first-time buyer couple that have come in to see you, you can literally dictate to an AI. Obviously, don't tell it names and addresses. Don't want to give too much personal information, right? But you can say things like what they earn, what they do for a living, how old they are, what they're buying, how much they're borrowing, what their sick pay status is, how much they get from work, all of that. And then you can literally ask it, how would you recommend that I pitch this to this particular couple? And it will tailor make a solution, and even go as far, if you want it to make it into a flow chart as well. So it will ask you things like, right, tell them this question. Was it a yes or a no? It was a yes. Right, now ask them this question. It was a no. Right, now ask them this question, sort of thing. And we've been having a lot of success with that. And it's really good for people that are quite new to the industry, maybe not feeling as confident with asking those questions, or just people that have lost their mojo a little bit with prompting and asking their clients.
So not just about holding the customer's hand, but actually holding the advisor hand through that process. Jamie, did you want to?
Yeah, but Matt, can I ask you a question on that? So how much time do you think that's actually saving you or your business from using AI?
I think it's saving lots of time with the appointments and things, because it's nice to have that kind of prompt before you go in, and you can mentally prepare for a conversation. And it's not taking away the human element. That's what's really important, right? Nothing's going to replace the conversation that I'm going to be having with that client. But just getting the prompts and getting the little snippets of try this, try that is just, it's so valuable. Yeah, really, really good.
Thank you. It's great advice. Thank you, Matt. So I'm going to pivot to a slightly different topic in this year's report, where we've explored the area around the advisor's value of protection BDMs. So the findings show there's a bit of a disconnect between the role providers wish their BDMs play versus what advisors actually value. So with the role of technology providing access to product information and case updates, how do we ensure that the BDM role evolves to meet the needs of advisors, not just today, but in the future? Vicky, you run a whole team of development managers. Can you talk us through how you position those out to market?
Yeah, so I think the clue's in the job title, business development. And I think we have, in certain, sectors of the market, I've seen that we've lost our way a little bit in that over the last few years. COVID was a great in many ways because it got us thinking more agilely, but also we were in crisis mode with the market, the industry, getting cases through. So BDM teams did become like more of an admin function rather than what they're truly designed to do. What we see in the networks and the clubs is so many pressures and so many different things that they have to deliver for their advisors that potentially firms and advisors don't get as much business development support from their networks and clubs as they used to. So actually that just plays right into the providers' business development teams and where they should really be adding value for advisors and principals as well. It could be tailor-made at advisor level or at firm principal level. And I think it's about working in collaboration, really understanding firms, understanding market pressures, customer pressures, how to have those really meaningful protection conversations, and then how that translates into sales and development and growth. I think my call to action on this would be about BDMs going back out there with renewed energy and vigour and thinking about what their job should be and how it could really make a difference. And likewise for our advisors and our firms is thinking about where could a BDM add real value and being really receptive and open-minded to having those conversations. Because I think we may have got into some bad habits about I'm too busy, I don't want to see a BDM. But when was the last time that you saw one? When was the last time that you saw your range across your panel and offering that you had? And when have you had a real business conversation with them and explored the potential potential and opportunity. I think there's so much potential here for us all to grow. We've got this huge protection gap, and actually together we can really make a difference if we can just be a bit more receptive and go back to basics.
I totally agree with you there. We have some fantastic BDMs out there doing superb jobs day in, day out. But actually, and we've got some superb advisors doing a great job. How do we just get the two together? Jamie, what's your thoughts on that?
Yeah, again, I agree with everything that Vicky said, and I'm really keen to hear from Matt, actually, because actually it should be the advisors in the firms that are really driving what they want from providers and business development managers. And we've seen from some of the statistics that over 50% of advisors are using their BDMs for underwriting, new business, policy type questions, which actually they can either get online themselves, they can use AI tools, which will actually start to do all the comparison for them. So for me, what I want to see from BDM teams is more about them being around the firm's table. How do they become part of the board? How do they strategize? And how do they support those particular firms in really sort of navigating our current market environment and helping them support and reduce the gap that we currently have within protection?
I love that. And I also want to hear from Matt. Before we do, John, is there anything further you'd want to add around the role of the BDMs that you see and maybe that diversification piece?
Yeah, definitely. Thanks, Steph. Just to build on a key word that Jamie said there, strategy. I think that is key. I would encourage all protection advisors to hold their BDMs to a higher account and to utilize them in a true business consultancy way, whether that's diversification into new markets with help and training, or even things like in detail business quality conversations, where we analyze things about business persistency, profitability of the business. So we go way above and beyond. So please can all advisors hold the BDMs to higher account.
Thank you. So we've got the provider view. I'll do a versus here, Matt, but from your perspective, what do you want out of a BDM? What do you as an advisor and as your firm need?
Yeah, absolutely. I think for me, I've been doing this for a long time, and certainly in my mind, the role of a BDM has probably changed quite considerably in the last kind of 5 to 10 years, really. And I think historically used to go and ask them for lots of criteria questions, pre-underwriting stuff. But these guys have got all good websites now that you can go online and get a lot of that information yourself, normally quicker than someone can by returning a phone call for you. So typically, if I've got a criteria question or something that's a little bit quirky, normally the websites are a great first point. Where I get value out of a BDM is usually to give me case studies and stories that I can use or help me to understand where you've been able to provide a policy, a product of some description to a client where maybe your competitor didn't, or give me a good news story where you've been able to pay out on something, because it's great for me to be able to relate those stories to my clients. So when I'm making my recommendations, because I'm recommending whoever it might be, and actually saw my account manager the other day, this was a story they told me, they were able to pay out for X, Y, Z or whatever. The other thing as well I'd like to add is a lot of these BDMs, they are fantastic. A lot of them have been advisors at some point as well. So a lot of them will have the experience that they'll be able to tell. So it's great, just sit down, book regular meetings with them and just get them to talk about what makes them unique. Get them to sell themselves to you, yeah.
So spend a bit of time to see the value. And what I'm hearing is, if it resonates with you, you'll be able to help it resonate with your customer.
Absolutely, yeah.
Perfect. So one of the very first questions was where we talked around consumers starting their journey online. And as an industry, we are concerned about the rise of finfluencers. Actually, finfluencers ranked top 3 when advisors were asked about what's the biggest threat to the advice sector. So it really does concern us. Yet, our research also shows that firms are underutilising the power of social media. So with 51% of advisors saying their firms don't use social media when it comes to protection. So how do we as an industry support firms and advisors to create a social media strategy? Matt, have I gone too far with strategy?
No.
Big word.
It is a big word, yeah, absolutely. I think if you can't beat them, join them, is probably the thing I want to say here. A lot of these content creators, like when I first started, a lot of the demographic that I was trying to proposition to first-time buyers, a lot of them were on Facebook, and you didn't really get people kind of doom scrolling like you do today. And a lot of the content that people are absorbing is quick 5-10 second videos, right? And there is a danger that you have a lot of people doing that are not advisors, could probably be telling misinformation protection. So you have to be a bit careful. But I do think it's great to get your target, who you're trying to pitch yourself to, your target market, whoever, whatever it might be. It's a great way to get on board, right? So if you can't beat them, join them. Snappy 5-10 second videos, podcasts are great. Anything that gets you into that doom scrolling thing, just to be able to then sign point to a bigger call to action. So, right, this is great. Whatever your message might be, go to my website, go to my main Facebook page, go to my main whatever it might be. So I do think that social media is massively important. And I think that firms that don't adapt to what their demographic is, how they're absorbing the media, are going to get left behind. So if you're one-man bands, there's loads of outsourced marketing departments, social media people that you can speak to. I'd probably say find a demographic that's similar to the target market that you want to get. And if you're in part of a bigger company, you should have a marketing department that would be able to help with those. That's a great first step. Yeah, absolutely. But yes, get involved.
Get involved. So I hear get involved. I'm not hearing TikTok dances yet. Jamie, I'm not saying you need to do a TikTok dance for us.
Come to me with TikTok dance.
Sorry. So what do we need to do to evolve? So how can providers help support? So everything that Matt's just talked about. So sounds like consistency, small, how do start? How do we build on that?
I think Matt's given some great advice, and from an advisor and from a firm perspective, I think is really important that we get that from Matt. I am going to put a but, if that's okay, because I do think it's really important from some of the themes that we've talked about today, people by people, relationships by relationships. So from LinkedIn or from other social media posts, you've got to be authentic. You've got to be yourself. That's got to come across naturally. If you're posting AI as an example, so there's some great posts through AI, but it's not authentic. And again, if you're going to try and appeal to more consumers, more customers, it's got to be that authentic. And to lean back into the other question a moment ago around BDMs, all the advisors or firms that aren't sure, link in with the BDMs. They can give some good advice. And also from some of our other providers, we have some big marketing organisations that can help and support, and we know what lands. So that would be my guidance to firms and advisors. Start small, but just make sure it's authentic.
And keeping on that consistency theme, Vicky, do you want to add on to that? How do we make sure that we're consistent in content regularly?
I think this just has to form part of your normal business processes, in my opinion. If you're not doing it regularly and as part of your BAU, then it's not going to have the right effect. It's no good posting randomly and hoping to acquire 100 new customers. It doesn't work like that. So this has to be fully embedded into your process, whether you do it yourself or you outsource it. It has to be on your weekly and monthly to-do list. That goes without saying. And I think it's to the point about target customers. Think back about, historical customer acquisition models that you may have had. Were you previously part of local networking groups? Well, that's all on social media now. Did you used to hand out business cards and ask someone to refer? You do that on social media now. So instead of it being a bit of a blocker, think about it's just a slightly different way of doing things how I've done them before, but in a much more modern and agile way. And just trying to really embed it into your normal day-to-day processes is the best way to make it work.
And all that content is out there. There's so much content out there available from all of the providers, from networks, clubs, and a little slight push, obviously, from fantastic research like Amy Viewpoint. I know, sorry, I couldn't help myself.
You go.
So as we come to the end of the Viewpoint debate, I have one last question for you all. So in 60 seconds, can you tell our audience what was the one key finding from this year's research that really stood out to you and your call to action for the sector? John, your 60 seconds.
Thank you, Steph. The one thing that stood out for me is in this year's research, 51% of those surveyed under age 35 said they would see a future need for income protection should they fall ill through unhealth. And if you think about what the average age is of a first-time buyer, it's around 35. So my call to action to the industry is don't wait until somebody has a mortgage need. Engage clients younger and start speaking to them now about how they could protect their income for the future.
Thank you, John. Jamie?
Yeah, mine done a very similar theme to John, actually, where we've seen from the research that the young demographic are getting more and more concerned about financial resilience as they get older. And I think what we are seeing as well, and I see it in my own twin daughters, that potentially they've got gap years, they're delaying university. What that potentially means is actually they're getting married a lot later. Not only married later, which means potentially if they want them, they're having children a lot later. All of those things are delaying that financial resilience. So for me, I would say for any advisor, my advice or guidance would be treat protection not as a product, but as a real conversation, and how you link protection within that particular client you have in front of you of their needs.
Vicky?
So I think rather than pulling out a stat or a fact, for me, it's just like an overall feeling that I get, and really getting people to remember that this is a people business. This is about advisors and customers making the most of those conversations and really driving better customer outcomes. So no matter what's going on in your head as an advisor, no matter what pressures you've got, remember that every interaction with a customer is an opportunity to make a difference in their life. And we are a people business. So put that at the forefront of your mind every time you enter the room and have a conversation with a customer.
And Matt, the final 60 seconds land to you.
So the best for last. I like it.
Definitely.
I think for me, the 39% of consumers not remembering that conversation. Graham has seen that stat and just kind of like, no, desperately wanted it to be a lot bigger. My message to advisors is you've got to get more passionate about the conversations that you're having. They're not memorable, you need to make them memorable. So whether that's getting up and dancing on your desk or anything to a point that those clients walk out of that meeting and think, oh, that was a bit crazy, but you know what, he had a point, and I'll remember that. Yeah. You need to get passionate about it. You need to talk about it earlier in your process, plant seeds, switch it up. If you spend most of your appointment talking about the mortgage and you approach the, would you like fries with that, protection chat at the end, switch it round. Do the protection chat first, speak to them about what's important, what are they looking to get, and what are they, because a lot of people, the mortgage is a means to an end, it's the home, harping in on that, concentrate on that. The mortgage will just take care of itself. That's what they came in to see you for. They're going to work out with that. Yeah. Sorry, that's probably more than 60 seconds.
No, thank you very much.
Thank you.
A big thank you to our panellists for sharing their insights in today's Viewpoint debate. I hope you have found this conversation as thought-provoking and informative as we have, and we've built your excitement to delve into this year's report. Thank you for watching.
Hello, I'm Kevin Carr, and I've worked with Amy on their Protection Viewpoint report for many years. We've talked about lots of areas already, but I just want to spend a minute on 3 areas. When it comes to AI, I think we're all currently in one of 4 camps, which is either 1, I'm not listening. 2, Google+, where we use AI instead of search engines because, let's face it, it's a lot better. 3, there are people and companies in our industry implementing AI every day to drive real business change. For example, assessing underwriting information. And 4, there's those who are pushing boundaries and changing the world. For the protection industry, building AI to give advice isn't that easy, but it's also not far away. However, it's even harder to get consumers using it. Just think about everything an IFA knows about you. People aren't going to sit down and upload all of that overnight. The second point to consider is a question. Do advisors and brokers really make the most of their business development managers? They're not just there to chase underwriting. They're there to help you grow your business. They might even help you understand which AI tools could most help your business. Are they, in fact, our industry's most underused ally? And third, social media and PR, which is all about messages and audiences. What do you want people to know about you? And who are those people? Know your message, know your audience, and keep in mind, you might need different messages for different audiences. Either way, keep it short, keep it authentic, and as we've heard, remember that people follow people. Sometimes we criticize our industry for talking to ourselves too much on social media. But let's remember, firms who post lots of consumer-facing content often put it on LinkedIn as well, because you might as well. And more importantly, Many advisor firms are looking for professional partners, such as mortgage brokers, accountants, lawyers, etc., to build relationships who are also often on LinkedIn. There are challenges. It's not easy to be lighthearted about our industry. ROI is rarely overnight, and most compliance departments would rather we didn't say anything at all. But whatever the outcome of the pending market review, we need to embrace the challenges, we need to collaborate, and we need to find a way forward.
This is my first AMY Protection Viewpoint as Chief Executive, and I've genuinely loved being part of it. It's been a real privilege to now be involved from within and see how the research has evolved over time, continuing to offer such a depth of valuable insights for both consumers and advisors, and this year's report is no exception. During the panel debate, I asked panellists to share their standout stat from this year's research. For me, the statistic that really resonates is 39% of mortgage holders recall having a protection conversation with their advisor. This is a question we revisited from past reports, with the results in 2020 showing just 36% of consumers recall a protection conversation. There is a disconnect between the great roles that advisors are doing and the protection conversations resonating with consumers. 82% of mortgage advisors state they advise their customers directly on protection, with a further 13% referring to a protection specialist. We need to continue to put the customer at the heart of our conversations and double down on efforts to ensure they fully understand the impact of not being protected. My hope is that today's discussion have left you feeling inspired and motivated. You are just moments away from diving into this year's report, so I won't keep you much longer. But before you do, I want to emphasise just a couple of things. Within the report, we've worked closely with our sponsors to identify clear call to action points. It doesn't matter the role you play within our sector, whether you are a firm principal, a network, mortgage club, advisor, insurer, reinsurer, or even a tech provider, there is something actionable for us all. Please take the time to explore the report, reflect on what you can commit to, and AMY look forward to working with you to put those actions into action. Each year, Viewpoint delivers a wealth of content, even more than we can even fully capture in a single event or report. And that's why I encourage you to visit the AMY website, where you'll find videos of real people, our consumer community group, sharing their thoughts and experiences around protection. These voices bring all the stats to life and can help spark ideas about how we, as a sector, make meaningful change. It's really important that we remember this is never a one and done conversation. Viewpoint is designed to be the start of the ongoing dialogue. And AMY will actively drive forward the call to action points throughout 2026. We hope you will join us in keeping the conversation moving, applying these insights and working together to ensure we continue to meet the needs of consumers and advisors alike. And before I finish, I would like to take a moment to thank our sponsors, the Exeter, L&G and Royal London, because without their partnership, their ongoing development and delivery of this report would not be possible. It's thanks to their continued support and shared belief in the importance of protection that we are able to keep delivering and exploring these insights and sharing them with the wider industry. And once again, thank you for your time, engagement and commitment. As we move from the present and into the future, let's use this valuable insight to shape a stronger, more informed and more resilient protection market. I hope you enjoy reading our report.